If you're experiencing a career or financial setback or want to be better prepared for the future, this episode's for you.
Welcome to the Transition Blueprint.
Did you know that nearly 60% of people are just one unexpected setback away from a financial crisis? Whether it's job loss, a business failure, an economic downturn, or government layoffs, setbacks happen. Today, we're discussing how to turn them into setups for financial and career success. I'm joined by Michelle Mohammed, a certified financial planner professional who specializes in life's major financial transitions and serves as the managing partner and senior wealth advisor at M&M Wealth Advisory, LLC. Thanks for being here today, Michelle. Welcome to the Transition Blueprint.
Thank you for having me, Michelle. It's a pleasure to be here, although it is a big time of transition for so many federal workers and federal contractors. So I'm hoping to provide some good financial guidance as they navigate this uncertainty.
All right, thank you for joining us. Let's start with some questions about the immediate financial concerns that federal workers, contractors, or anyone experiencing job loss for that matter are facing right now. I'm seeing many people who've been shell-shocked after being riffed. Their concern is almost always financial survival after moving through the emotional grief. How can these individuals make their savings last longer while they search for another job?
That's a really good question. It all starts with calculating your monthly essential expenses and cutting most discretionary expenses. I've had many conversations with federal workers, and what I find is that the solution, it starts with determining your expenses, knowing what you're spending, track and possibly reduce your expenses. Then understand your income. A lot of people don't know what their income is. So will there be a pension, annual leave? Sick leave will not be paid. Some folks don't realize that. Then will there be severance pay? In some cases there are, and I'll provide links after this conversation that has information about that. And can your part-time job or gig help fill the gap? In a recent conversation with a couple of my clients, we determined that a part-time job, consulting job, was able to become a gap filler, so to speak. Not completely fill the gap, but it certainly prevented them from falling behind and provided continuation of employment on the resume. And apply for unemployment. That is a viable option for several people. We'll talk about that more later.
Sure.
Create a financial inventory is another thing that's very important. I have found that knowing what you have in bank accounts, retirement accounts, and any non-retirement investments, that helps, because how long will your savings last? Well, you need to know how much you have in savings and then back calculate with those expenses that we talked about before.
That makes sense with so many competing financial demands, because your job might have stopped, but your bills, they keep coming because they really don't care. So what should be the top financial priorities during this income reduction period?
The top priorities are going to be what I call the essential expenses. Some people call like have little catchy names like the survival for and such. So things like your housing payments, utilities, food, and essential medical costs would be those survival costs. A fifth that could be important would be transportation, because you may need to drive back and forth to interviews, continue your life going on if you have children.
I was going to say that you will still need to leave your house and continue.
It's true. Thank you, Michelle. Yes, you do want to leave your house occasionally.
Kids still have to go to school, still need to do supermarket runs, all of those things.
Indeed. On the other hand, discretionary expenses become negotiable during this transition period.
So federal discretionary.
Sure. No, that's a great question. I'm so used to using it that I have to take a step back and define that. So discretionary expenses are things that you have discretion over. You can make choices. So, for example, a discretionary expense might be a subscription to Netflix or something. On the other hand, if you find that that's something that's helping you keep your sanity, maybe it's a little bit of a gray area. In general, though, there are things that you can do without and possibly should do without during crunch time.
And that will vary from person to person in terms of what they consider what's discretionary for them. Because, like, oh, I have to miss my hair appointment. Oh, no. So different people value different things. And so what they consider discretionary might be slightly different. But well
That is
understood that
correct.
these are the main essentials of what you need to make sure that you continue to stay on a, stable, healthy financial path.
Right. And sometimes it bears talking through with other people, because the hair appointment, if it's to make sure that you're well coiffed for your interviews and such, that makes sense. On the other hand, if it's really something that you're doing on a much more frequent or regular basis than necessary, and there are things that you could do yourself, then you have to make decisions. It's so funny that you would mention hair, because I was thinking about that. For so many of us women, that's a big deal. And
We're Black
during
women, and
COVID,
hair is a big deal.
oh, hair is a big deal. And I remember during COVID, remember people showing pictures of themselves with their natural gray or whatever color and stuff like that, and how it was such a big deal. I'm doing this myself, or I'm not doing anything, that kind of thing. We are not necessarily in such a dire straits that you cannot go to your hair appointment, but you might need to space it out a little bit more. And then if there are things that you can do yourself, then that would make sense.
Thanks for providing that additional clarity about how we think about what's discretionary versus what are essential expenses. So I know that many people who are facing job loss have various debts, like big ones like mortgage debt, student loans. Some people have a lot of consumer debt, like credit cards. How should they pause or adjust these payments during this period?
Great question. Federal student loans, I'd say consider applying for income-driven repayment plans or hardship deferments. And then for mortgages, if you're having a hard time making payments, contact your lender proactively about options like forbearance. Many have hardship programs, especially for federal employees affected by government actions. And if you're one of the few with job loss mortgage insurance, use it. Then we get to something.
Wait. There's such a thing?
There is such a thing.
Let's not
To be
gloss over this
frank,
now. So let's
I've been a financial planner now for over 24 years, and I would tell you that I was not familiar with that either. But they're in doing my research as I've been helping folks navigate these options, I found that there is something called job loss mortgage insurance. I'm not quite sure, to be frank, what the pricing is and if it's really something that I would recommend per se, but if you have it, use it. Um, I'm sure that's clear as mud, but that's the information I have to give right now. Um, as far as credit cards go, try to make at least minimum payments. Check for 0% balance transfer offers. Call each company and ask about hardship programs or temporary interest rate reductions or payment plans. And then the key is really being proactive rather than waiting until you miss payments, which damages your credit score and can have a negative impact on certain job applications.
Can I go back to the mortgage part for a little bit?
Sure.
So you mentioned that there might be hardship programs or forbearance or things of that nature. And I haven't looked into that. And so I'm asking for a friend, and my friend is really me. So what might these programs look like? Are they just sort of, okay, you don't pay right now or you pay less right now, but we're really going to tack on a whole bunch of stuff later on? Is that how these things work in general?
There are a variety of ways that mortgage lenders will approach it, but that is one of the ways that it will be your robbing Peter to pay Paul kind of situation.
So not now, but later, because we will get our money.
Yes, that is exactly right. They are not
Let's talk in
nonprofits.
very, very clear language.
Yes,
Right.
they're not nonprofits. So it is important to read the fine print. And one thing I always say to my clients is that, hey, I'm here to help you with financial decisions. So if you're looking at different options, we can talk them through. Ideally, you would have your cash reserves and your mortgage would be a priority in paying from your cash reserve, so you don't even have to go through this. But again, we have to be real, and if you don't have your cash reserves in place, and this is something that you have to look at the different options and review them with your financial advisor, or I suppose your accountant might be willing to do that, but most of the time it's going to be somebody like your financial planner.
Yeah. Thanks for that. And for viewers who do not have a financial advisor, what might you suggest that they do when they're thinking about these decisions? How do they work their way through if they're not quite certain?
Great question. I would say that credit counseling, nonprofit credit counseling agencies can be helpful in helping you navigate that, or at least discern, hey, these are the different options. I will also say that there's myself and several of my colleagues have answered the CFP board's call to action to help clients who are affected by these federal layoffs to navigate this uncertainty. So it could be that if you use that pro bono or reduced rate time with the financial planner, there's several of us on the list that you say, well, here's something I need some guidance on. So that's an additional resource. But nonprofit credit counseling agencies can also be helpful. I'm not talking about these for-profit debt places that can actually damage your credit. I'm really talking about independent nonprofit credit counseling agencies, and there'll be links after this podcast.
Let's talk about debt consolidation. What should we know? What should we do?
So it can be very helpful, but you have to be forward thinking. So generally, or in my professional opinion, you may want to consolidate before leaving your position, as approval becomes more difficult without regular income. Of course, if that's no longer an option, you can still try. There are things like personal loan consolidation. You can use, if you already have a home equity line of credit or a home equity loan, you could certainly use those to help offset some of the costs, but be very careful, because then you're putting your home at risk if you cannot pay for those. So as a financial planner of over 24 years, I've often told clients, get your home equity line of credit well before something happens so that you have access to it. But you also don't want to use your home as a piggy bank. So it's something to keep in mind. And student loan consolidation should be approached cautiously, as it can eliminate some forgiveness options, because this may not be forever. You may return to federal work in some
Or
way,
other
shape, or
work.
form. Pardon?
Or other work.
Or other work that qualifies for
Mhm.
forgiveness. There are certainly some school systems, nonprofits, et cetera, that would qualify for that. So you should approach that cautiously, but at the same time, it is an option to consider. And then for significant debt, consider working again with a nonprofit credit counseling agency. And again, caution on those debt settlement companies that promise to negotiate away your debt. They can end up damaging your credit.
Okay. Wonderful. Now, emergency funds. We've all been told we should have them. Some of us do, and some of us don't. Let's get into it. What strategies do you recommend to ensure emergency funds, assuming that we have them, last as long as possible?
So they should be deployed strategically. It may not be the time for you to tie yourself up in CDs, long-term CDs. Maybe you could do a short-term.
CDs are certificates of deposit, correct?
That is absolutely correct. Thank you for reminding me about using the acronyms. So for certificates of deposits at the bank, sometimes they give you a higher interest rate than what you would normally get, but you have to be strategic during times like this. So you may want to, if you do get CDs, you may want to ladder them over a short period of time, 1, 2, 3 months, or 3 months, 6 months, 9 months, whatever the case may be. That being said, alternatives that work even better and are more liquid would be high yield savings accounts and money market accounts and such. So if those are available to you, I would highly recommend that you consider those because there's FDIC insurance depending on where you get them. High yield savings accounts typically would have FDIC insurance. I would only suggest the ones that have FDIC insurance that are coming from legitimate banks. Money market accounts, you have to be more careful because money markets are great, but bank money markets are different than investment company money markets. FDIC insurance or some type of coverage is available through the bank, but not if you are getting a money market through an investment company. That would be something called Securities Investor Protection Corporation, and that's a completely different ballgame. It's not the same kind of protection. Now, if you've tracked and adjusted your spending, as we already spoke about, you would have a good idea how long those emergency reserves can last. And you can then say, okay, I'm not going to enter into, or we, if you're a couple, we're not going to enter into any big unnecessary expenses. Of course, if a major repair like the roof or the heating system is necessary, you are going to want to do that. But see if they have a payment plan available instead of putting down a lump sum. Oftentimes they still have these low rate or no rate payment plan options available for those types of big expenses. And finally, look into assistance programs specific to federal employees. Some federal credit unions and employee associations offer bridge loans or emergency assistance.
So that covers the people who do have an emergency fund. For those who may not have an emergency fund or it's woefully insufficient, are they just up the creek without a paddle? What could they do?
Well, generally speaking, in my opinion, there are different options you can pursue because unfortunately it's not uncommon, even among federal employees, to not have or to have insufficient emergency reserves. So if there are non-retirement investment accounts, talk to your advisor about how best to approach liquidating them, tax implications and such. Consider selling unused items. I know some people who have relatively expensive resaleable items that they have just sitting in their home collecting dust. So you can consider things of that nature. More attractive and better in general, I think, for your whole person would be taking on consulting or gig work if possible. I know that's difficult for some folks who are in an environment where most of the people in their job function were laid off at the same time, and so it's pretty competitive.
Very competitive.
Also, filing for unemployment will help with that. And then looking into community resources like assistance programs for utilities and food. There are people who never thought that they would be going to food pantries who are. And sometimes it does require that we swallow our pride a little bit and take on some of those forms of assistance that hopefully in the future we will be able to contribute to for others. And then check with your federal employee assistance program as it may continue to offer services for a period after separation. Check with your HR about that. And the goal is really just to find temporary bridging mechanisms while you're focusing intensely on the job search.
Okay. Thank you for sharing that. So in terms of other financial options that people might have to tap into, should they consider this option? What are the consequences if they consider this as an option?
In my professional opinion, many times this should be the last resort. However, as in so many things in finance, it depends. It depends on things like your age, your proximity to retirement, your need, etc. So in the previous question, you had asked me about if you didn't have emergency reserves. Obviously, if it means the difference between you going into bankruptcy or going into further debt, etc., and not, it should be evaluated whether you should take your start taking your retirement accounts. Now, if separation occurs after 55, there's no 10% penalty, but you'll still pay income taxes on the thrift savings plans or 401k withdrawals. Again, that separation has to be from that job, not from a previous 401k or something like that, okay? Early withdrawals from the TSP typically come, or from a 401k or an IRA, typically come with a 10% penalty plus those pesky income taxes that I mentioned before. Loans are not available to separated employees. So if you anticipate needing to access these funds and you're still employed, you may want to take a loan, because if you already have a TSP loan, you can pay it back by direct debit, check, etc. You can see that on the TSP website. There is also something known as 72T distribution, so substantially equal payments, and that would allow you to have penalty-free withdrawals if taken in those substantially equal periodic payments. The tricky thing about this is that you cannot modify this until the later of 5 years from the first payment or reaching age 59 and a half. So when I'm talking to people in their late 40s, just imagine that could be really difficult to find new employment and be contributing, and at the same time you're forced to continue taking these withdrawals. Not ideal at all. So it is an option, but you should talk to your advisor about whether it's the right option, and hopefully, in my opinion, as something of a very last resort.
Any other points on retirement accounts before we move on to budgeting?
It does require you to look at those retirement accounts. Some federal workers that I'm meeting with have substantial funds in their retirement accounts. So again, put everything in context. It does depend. It does depend on if that's your main asset apart from your house, and it will help prevent you from doing some things that would damage your credit or other things, then it could be a viable source. But consult with a professional, your financial advisor or one of the financial advisors who is doing work during this time to help federal workers would be a good place to start in terms of as a sounding board, so that you can really not just look at it from an emotional standpoint, but also from a very practical financial standpoint. What are the implications, etc.
Let's talk about budget. Michelle, creating a budget during this transition is critical. How do you recommend former federal employees, contractors, or anyone facing job loss create a survival budget?
So it starts with separating wants from needs. As we discussed earlier, you're going to want to look at those key survival expenses and cut out those discretionary, in other words, those things that you don't need, that they're more of a want, if you will. So some items may seem discretionary, but are necessary to stay healthy. Example, going to the gym. I met with a few couples recently who were considering stopping things like tutoring for their children. And I said, well, it might be better for you to stop contributing to the 529 plans than to stop tutoring, for the simple reason that that is somewhat of an essential expense. It might come back to bite and cause some issues with the children being able to go to the very college that you want them to go to, because if they need that to help them, then it is an essential expense. So I would definitely say there are things that it's case by case. It's specific to you, but it's also good to talk it through with an objective professional, because I was able to give them my insights as to why I would categorize that as essential as opposed to discretionary. Just the fact that you can stop something doesn't mean that you have to. Additionally, something like the
I want to
gym.
interject, Michelle, before you move on, because you're their financial advisor and you have a picture of their finances, also knowing that that is something that they also could continue to do, right? Versus something that would just stretch their budget just too much.
Well, I understand what you're saying, and in some cases that's what's happening, but in other cases, these are folks who I'm meeting for the first time because of the CFP board's pro bono and reduced rate situation. And so with that offer, I'm meeting these folks and talking through with them certain things. So I don't really know their situation. They have to share it with me. And then based on the information they share with me, I give advice. So I will also say that creativity is something that is very wise in these circumstances. So an example of creativity would be I've had a couple of instances where folks with double federal employee family and they're getting RIFT, terminated, etc., right when they have one or more children in college or going to college.
I'm sure that's the case for thousands of people right now.
Yeah, and it's difficult, but I have to give kudos to multiple people who I spoke to who they've made the decision to say, okay, even though you were accepted to these various universities and such, we cannot afford it anymore. And so you'll go to community college and then transfer. So for example, in the state of Maryland where I am, you can do 2 years at a community college. I believe you get your associates, and then you transition into one of the University of Maryland school systems or one of the state schools. And nobody cares what the diploma says at the end. Nobody cares what your journey to get that diploma was. If it's, for example, the University of Maryland, College Park, you got your degree from the University of Maryland, College Park. It's not like, oh, I started with Montgomery College or Howard Community College or Prince George's Community College. And in any case, even if you do, it is an honorable, very solid, and much less expensive way for you to get your education. So even in good times, it's worth
I was
considering.
going to say that. I think it's a great strategy, even when this is not the situation where the parents are facing job loss or anything. It's just a good financial strategy considering the cost of higher education to do it this way.
Yes, exactly. And if you can reduce or eliminate the need for student loans, that is smart. I don't know many financial advisors who would argue against that.
Yeah, it's a smart money move.
Yes.
I concur. So tell me, what specific expenses could be cut first? What are smart ways to reduce costs without sacrificing too much? Like we did talk about discretionary expenses, but are there some big things that would make a bigger difference than, small things that you might do occasionally, like getting your nails done or something like that?
I think a lot of times it's the small things that get us. It's the subscriptions you barely use, the premium services, the unused gym memberships. Right. Right, absolutely. I mean, in my family, for example, we use some of these meal kits like, Home Chef or HelloFresh, sorry. I would say that in crunch time, we might cut those and just use our own recipes and or do our own grocery shopping because we have much more time. So those are examples of things that you can restart later on if necessary. It's not going to be the end of the world. There are a lot of people who have gym memberships and they're not using them. And even in unemployment, they won't use them. So why pay for them? You often can find a lower version where you downgrade a service, and even something like your cell phone plan or maybe getting higher deductibles for certain insurance plans. But again, approach with caution. It's wise to talk to a professional about that and go through pros and cons when it comes to something as serious as your insurance coverage, because you don't want to be caught in a situation where you have such a high deductible now that you cannot meet that deductible if an emergency truly happens. And also, you could buy it in bulk, whether it's places like Costco or Sam's Club or whatnot. buying in bulk sometimes saves money, but you also have to evaluate. Because if you're buying in bulk and you're a party of one, well, how long is it going to take you to get through all that stuff? Is it produce where it's going to spoil and really that wasn't the smartest move? Or is it toilet paper, which can take you through for quite a while? You can also try some things that are not, as maybe as comfortable for you, but you have to evaluate for your situation whether it would be wise and safe, which would be, could you take on a roommate? If you rent, could you consider, after much consideration, breaking your lease and moving in with your family? Again, for some people, that might not be the ideal situation. It might not be good for the overall family relationship, but these are things to consider.
Uh-huh. Definitely. And it might not be ideal now, but depending on how long that person is unemployed, people might find themselves making decisions that pride would have kept them from in the early goings, that practicality might dictate that this is the move that you need to make. Life will tell you what decision you have to make depending on where things land.
That's
so it's
exactly right. Yeah,
yeah,
just don't wait too long.
just don't wait too long. So it's nice to know what the options are. Now let's talk about unemployment benefits. How do these impact financial planning?
So unemployment benefits can be a crucial lifeline, but they require careful planning. First, RIFT employees should apply immediately as benefits are not retroactive beyond your application date. They're taxable. So either elect to have taxes taken out and withheld or set money aside for taxes. This is something that trips up people sometimes. So just be mindful of that from day one. And then plan on these unemployment benefits lasting only temporarily. Some states have waiting periods and benefits typically last 26 weeks, although extensions are sometimes available. And remember that benefits can change if you have a part-time or gig income. A lot of times we don't think about that, but if you have income, it can reduce. And you have to be honest, or at least you should be honest on those, I believe it's weekly assertions that you have to make to continue getting your benefits. If you receive severance pay, some states may delay unemployment benefits, so check your state's specific rules.
Okay, good to know. Also, people worry about losing their benefits, and I'm assuming we're talking about health insurance benefits during this period. What are some things that they could do?
So benefits transition requires immediate attention. Health insurance typically continues for 31 days after separation at no cost, but you have 60 days to elect the temporary continuation of coverage, or TCC. And be aware that you will pay the full premium plus a 2% administrative fee. Also, you want to do things like review your life insurance conversion options. You have 31 days to convert to an individual policy without medical examination. And you'll see the link that will be provided after this that talks about that on the OPM website. If you do have a flexible spending account, submit all claims quickly, because generally speaking, from what I understand, you can only claim expenses incurred before your separation date. And then review and calculate the value of your accrued annual leave, which will be paid out in your final paycheck. Request, if possible, request a benefits counseling session with your HR department before separation to ensure you understand all the options and the deadlines. I know that's not always possible. Some people, their key cards just don't work after getting an email or whatnot. But if you do have the option to plan ahead, please do.
Looking forward to the future. How can federal employees, contractors, or anyone better prepare financially for future job losses?
Well, this is something I talk to my clients about, and I think a lot of my colleagues talk to their clients about on a regular basis. When I have clients who are either self-employed with income that ebbs and flows from year to year, or they're at a company or in an industry prone to layoffs or where they suspect that layoffs may be coming, I advise them to save 1 to 2 years worth of those essential expenses. That sounds like a lot, but it helps tremendously if your income drops or disappears suddenly. Diversify your income if possible with side skills, side jobs, etc., that can generate revenue during transitions. Maintain a low debt to income ratio. Create a financial fire drill if you're not already in one due to this situation. And that would be, what's your plan of action? What would you do? What would you drop first? How would you approach things if you did experience a job loss or job interruption? Review your insurance policies annually to ensure that you have adequate coverage. In some cases, you can have things like disability insurance where during some policies will have during periods of unemployment that you can pause, etc., those premiums. But you do want to be very careful and understand your coverages and how they work. Build your professional network continuously.
That is a key point. And it brings me to my final question, Michelle. My final question for Michelle Mohammed is, what are some things that people can do to regain financial stability and pursue wealth again after this setback? Because we will bounce back. Give us some strategies for the bounce.
I think the word that we used in other crucial times like COVID that applies to this time would be resilience. And financial resilience requires both planning and adaptability. As Mike Tyson once said, everyone has a plan until they get punched in the mouth. And I'm paraphrasing there, but
And a whole bunch of people got punched in the face all at the same time.
exactly, which means that there's a collective, if you will, trauma or grieving because our jobs are so much a part of our identity. And I've heard so many federal workers say, the work I did or I do, if they're not yet rift or let go, my work is so important. And so that is a whole thing. I mean, I'm sure there are many mental health professionals guiding folks through that.
The identity shift is a big part of this transition that needs its own conversation.
Oh, absolutely. Absolutely. In helping clients through life's big transitions, whether they're deaths of loved ones or divorce or transitioning into retirement, a lot of times I see that there is that whole psychological element to it. And like your identity with someone else, your identity as part of an organization, etc. You are right. That is a whole episode onto itself that requires other professionals or specialists to weigh in.
For viewers who are watching this, there is a previous episode that goes into the psychology of a job loss, the 5 stages of grief from the emotional side and from the career side. So make sure you go back and check out that episode. Michelle?
I'll check that episode out. Thank you. Thank you. Many of us felt that federal government positions were completely secure, but this restructuring proves that nothing's guaranteed. And therefore, you have to arm yourselves with certain things like lifelong learning. Always a good thing. Even if you're in the most stable of stable jobs, continue to develop new skills, learn new information, get new certifications, etc., that will allow you to pivot if you have to. At the worst case scenario is you have more knowledge. Your most important financial asset is your earning capacity, unless you are so close to retirement or that you already have your financial savings in place. When you plan for the worst case scenarios or for challenging times, And that gives you some level of security. You can only control what you can control. And in a situation like this, where there's so many things that we don't control, what we can control is what we choose to spend and how we choose to live our lives. And focusing on experiences and people, that is much more important than focusing on material things in any time. And we live in a great area with lots of free stuff.
So take advantage of what it is that you have available to you. Thank you so much, Michelle. This has been incredibly valuable information for federal employees, contractors, or anyone experiencing a job loss and navigating a difficult transition. So let me recap a few key highlights. Create a financial inventory, know your savings, income sources, monthly essentials, prioritize the survival budget, right? Housing, utilities, food, medical costs, and maybe transport. As an additional one, strategically manage debt, seek hardship options, adjust student loans, and negotiate with creditors. Use a tiered approach and explore aid programs to protect your emergency funds. Avoid early TSP withdrawals, your thrift saving plan withdrawals, only as a last resort, and make sure you understand the tax and penalty implications. Build a survival budget if you didn't have one before. I like to call mine my noodle budget. Use a zero-based budget, cut invisible expenses, and downgrade services like subscription services. So if you have Hulu, Netflix, Disney, Prime, pick your favorite and go with that. And also apply for unemployment benefits as soon as possible. Know the tax implications and state specific rules, and plan for the future. Start building a 6-month emergency fund once you regain employment to make sure that you have a runway should you encounter job loss again in the future. Diversify your income to create that financial resilience and keep your skills marketable, because the one thing you can never lose is the knowledge that you have gained. Michelle, any final words of encouragement?
Remember that as income is either restored or stabilized, you then want to rebuild your emergency fund and work hard to pay off debts and then possibly increase investments. When you do restart retirement savings, take full advantage of any employer match programs. Perhaps more concretely, from the perspective of a certified financial planner professional, create a concrete financial plan that accounts for future income disruptions. The best time to prepare for the next financial challenge is right after you've weathered one, while the lessons are fresh. But please remember those lessons and grow from them.
So a challenge for the viewers as we conclude. Write down one action you will take this week, reviewing your budget, cutting any unnecessary expenses, or exploring a new career path or side hustle. And let us know in the comments what you plan to do. If this episode resonated with you, send it to a friend or anyone you know who's in transition too. And don't forget to subscribe to the Transition Blueprint so you never miss an episode. Your next move starts now. Let's build your blueprint together.